Have you noticed how certain numbers keep popping up in the crypto world? It's not just coincidence. These numbers seem to follow us everywhere, on our screens, in our conversations, and even in the memes we share. They're more than just digits. They're signals that capture our attention and imagination. From social media to trading charts, specific digits seem to take on a life of their own. They trend on Twitter, spark heated debates in Telegram groups, and even inspire viral hashtags. It's as if these numbers have personalities, shaping the way we talk about the market. These numbers spark debate, speculation, and even become part of the crypto community's identity. People rally around them, using them as rallying cries or inside jokes that only true believers understand. People hunt for patterns, hoping to find clues that might give them an edge in this fast-paced market. Every chart is scrutinized, every decimal point analyzed as if the next big move is hidden in plain sight. This obsession with numbers isn't new, but it's more intense than ever. In the digital age, data is everywhere, and the pressure to keep up with the latest figures is relentless. Numbers like 74, 13, and 589 have become legendary, linked to price targets, tweets, and trading milestones. They're not just statistics, they're milestones that mark the history and culture of crypto. When a number repeats, it becomes a symbol, shorthand for a prediction or hope. It's a way for the community to communicate complex ideas with just a single figure. Sometimes, a number marks a key support level or a psychological barrier for a coin's price. These numbers can trigger waves of buying or selling, simply because so many people are watching them. Understanding why these numbers matter helps us see how narratives shape investor behavior. It's about more than math. It's about belief, emotion, and the stories we build around the market. It's not about magic formulas. It's about the psychology of markets and the stories we tell ourselves. Numbers become anchors for our hopes, fears, and dreams of financial freedom. By decoding these numerical mysteries, we become smarter, more critical participants in crypto. We learn to question, to analyze, and to see beyond the hype. So, what's behind the numbers everyone's talking about? Let's dig in and uncover the real stories hidden in the data. 589 is legendary in the XRP community. Born from speculation, price targets, and a few cryptic messages, it's become a symbol of hope, even if there's no proof it means anything concrete. 13, long considered unlucky, is debated in crypto circles. Sometimes tied to dates, sometimes to patterns, always to speculation. If a big event happens on the 13th, or a chart repeats every 13 days, the community takes notice. 74 has its own following, linked to theories about regulations, tech rollouts, or even just as a meme. When enough people believe in a number, it starts to influence real trading behavior. These numbers become a shared language, a way for the community to make sense of a chaotic market. Whether they're signals or coincidences, their impact on sentiment is real. Understanding their stories helps us see the social side of crypto. Why do numbers matter so much in the world of trading in crypto? It's not just about math, it's about psychology, patterns, and the collective behavior of millions of traders. Every number on a chart tells a story, and understanding that story can make all the difference. It all comes down to two key concepts: support and resistance. These are the invisible lines that guide the market's movements, shaping the way prices rise and fall. Think of support as the floor, a price where buyers step in and stop a coin from falling further. It's where confidence returns, and people see value, creating a safety net for the price. Resistance is the ceiling, where sellers pile in and halt a rally. It's the point where optimism fades and traders decide it's time to cash out, putting a cap on how high prices can go. These levels are often round numbers or ones with history, like 589. Sometimes it's a psychological barrier. Other times, it's a level that's been tested again and again. When a price breaks through resistance, it's a bullish sign. Momentum builds, and buyers rush in. But when it falls below support, panic can set in, and prices may tumble quickly. Flash crashes, sudden, sharp drops, can smash through these levels in seconds, driven by bots, panic selling, and sometimes even technical glitches. These moments can wipe out gains and trigger chaos. These events show just how fragile and fast-moving crypto can be. In a matter of moments, fortunes can change, and the market's mood can flip from euphoria to fear. Traders watch key numbers because they become self-fulfilling prophecies. When enough people believe in a level, their actions reinforce it, making it even more significant. A number that's acted as support or resistance gets burned into the market's memory. It becomes a reference point for future trades, shaping decisions for weeks or even months. So when you hear talk about a specific number, it's often about these critical zones, places where the market has made big decisions before. Understanding this helps you read the market's map and avoid getting lost in the hype. It's about seeing the bigger picture, not just chasing the latest trend. Numbers aren't magic, but they're powerful signals in a data-driven world. They reflect the hopes, fears, and strategies of everyone in the market. Learn the language of support and resistance, and you'll start to see the market differently, more clearly, and with greater confidence. The numbers game isn't just for traders. Behind every market move, there's a web of influence that stretches far beyond the trading floor. Tech leaders and politicians play a crucial role too, shaping narratives and sometimes even shifting the direction of entire markets with a single comment or tweet. Ripple's CTO, David Schwartz, has his tweets dissected for hidden clues by the XRP community, who are always on the lookout for hints about future developments or partnerships. Even a casual mention of a number or a cryptic emoji can spark wild speculation about upcoming announcements, partnerships, or major updates. Public figures like Donald Trump have their comments mined for crypto signals, whether those signals are intentional or simply offhand remarks that get blown out of proportion. The community craves validation from powerful voices, hoping for signs of mainstream acceptance or a nod that could legitimize their investments. A single statement can move markets dramatically, creating a feedback loop of speculation, price action, and even more speculation as traders react in real time. This dynamic is amplified in crypto, where news spreads instantly, volatility is high, and reactions can be swift and unpredictable. Watching these influential figures is now part of many traders' strategies, but it's a risky game, full of uncertainty and noise. Interpretations are often wrong, and relying on one person's words or a single tweet can lead to costly mistakes and bad decisions. Treat these signals as just one piece of the puzzle, never the whole picture. Always combine them with solid research and a broader perspective before making any moves. In finance, a black swan is a rare, unpredictable event with huge consequences. In crypto, black swans are even more likely. Think sudden regulations, exchange hacks, or global crises. These shocks create panic, break models, and send prices spiraling. The emotional fallout leads to irrational decisions and market chaos. Crypto's youth and evolving rules make it especially vulnerable to these surprises. So how do you prepare? Don't try to predict the unpredictable. Build a resilient strategy. Diversify. Manage risk, and never invest more than you can afford to lose. Accept that black swans exist, and you'll be less likely to panic when one hits. A humble, cautious mindset is your best defense. In chaos, clear thinking can turn crisis into opportunity. In a market full of mysterious numbers, it's easy to get swept up in the excitement, but always question the source. Who's promoting this number, and why? Correlation isn't causation. Just because a price moved after a tweet doesn't mean the tweet caused it. Avoid confirmation bias. Challenge your own assumptions and look for evidence that contradicts your theory. Be a detective, not a follower. Gather evidence, consider alternatives, and draw your own conclusions. Do your own research. Read charts, study fundamentals, and stay informed. Use numbers as starting points, not final answers. This critical approach protects you from hype and deepens your market understanding. Build your own framework for analysis. Don't base your strategy on rumors or memes. Combine skepticism with curiosity, and you'll separate real signals from noise. Crypto is a maze of opportunities, risks, and mysteries. Numbers and predictions add excitement, but your best asset is curiosity and independent thinking. Staying informed is your compass. Trusted sources like Crypto Insider help you connect the dots. We break down complex topics so you can make smart decisions. The market moves fast, but curiosity keeps you ahead. Let new theories spark research, not blind belief. Active learning builds your skills and confidence as an investor. The most successful in crypto are the most curious, always asking why. Knowledge is your best defense against fear and uncertainty. The more you understand about psychology and market dynamics, the better prepared you'll be. Crypto will always be full of patterns and puzzles. Stay curious, stay informed, and let us guide you through the ever-evolving world of digital finance.